I'm Kendall Young, Division Chief here at Diggs.
I have a couple of questions about loan contingencies. First, what is a loan contingency?
So when you find the house of your dreams and you make an offer and then the seller accepts it, you essentially say to the seller, Mr. Seller, I really want your house. I think I can get a loan, but I have to apply for it and go through that process. And if I can't get a loan, then I'm so sorry, but I'm not going to buy your house. And, and that's just a contingency. It's a condition.
And what needs to happen in order for me to remove my loan contingency?
Well, there's a whole process. It starts with you submitting a loan application to your lender and giving them all of the backup documentation, like proving that you've had the income, telling them what your debt is, them checking out your credit history. And they also have to check into the history of the house, making sure there's no unusual loans or judgments against it, and making sure that the home is worth what you offered for the house. Assuming everything goes together, you'll be able to get your loan.
I'm not 100% sure that I'm going to be able to remove my contingency on time. What happens if I can't remove it on time?
Well, everything in the purchase contract is based on you doing certain things within a certain time period. And if you don't, for example, get your loan, then the seller might agree to give you more time, or they might say, nope, no more time. If you can't remove your loan contingency, you need to exit this contract so we're free to sell it to somebody else. And if we show that we're doing everything we can, most of the time the seller will give us a little extra time if we need it.
What happens if for some reason my loan is denied?
Then we make sad face. If your loan is denied, sometimes it's because the bank you applied to has some particular rule that when they apply it to you is not going to give you the loan, but maybe other banks would be more forgiving with that particular situation, like for example if you're self-employed. So we might be able to take your loan to another bank and still get your loan. Another thing that sometimes happens is if you increase your down payment, you can get the loan. So maybe tapping into the bank of mom and dad is a possibility to solve our problems. But if we do everything possible and you can't get that loan, we're going to have to cancel the contract on this house and either wait until you've saved up more money or gotten better credit, or we'll need to find a house that's a lower price that you can get a loan for.